What is up, people? Welcome to episode 3 of Walkthrough to Profitability. Today we're looking at trends, what that is, confluences, what they mean and what they're used for. Right now it's really not going to make a lot of sense what I'm talking about, but when we get to it, obviously I'll give a deeper explanation. Breaker structure, one of our confluences, and liquidity. So, first things first, we're going to have a look into trends. So, all a trend is higher highs and higher lows for an uptrend. So, to basically explain what that means, we looked into highs and lows last episode. Now we're going to use this to form our first sort of confluence, which is this high is formed, then we form a low right here, and then we form a higher high and a higher low. See how the high is this high, the second high is higher than the second high, the first high. So all that means, this is a higher high than this high, and this low, this low is a higher low than this low. All this would mean is we're in an uptrend. So, if we take a look at the market to show an example of this, here we go. As you can see, we get a high, we get a low. We then get a higher high here and a higher low. If you look at this low and this low is higher than this low. So, that's an uptrend, is what we would call that. Essentially, the way you would look at an uptrend is it's going to continue higher. Like, an uptrend signals that this is the way the market's moving. Now, another trend is the opposite direction, a downtrend. So, highs and lows, but we get a lower high and a lower low. So, the second high is lower than the first high, so that's a lower low. Similarly, this low compared to this low, the second low is lower than the first, so this is a lower low. So if we look for a downtrend, here we go, beautiful example. We've got a high, we've got a low. We then get a lower high and a lower low. So this is a downtrend, because we're moving down. See? We get a high here, a low. Lower high, lower low. Downtrend. And then look, it just continues carrying on this way. Until we move into a uptrend. So this will take us nicely onto our second thing we wanted to cover, which is confluences. Now, a confluence is essentially, what is my reason for entering this trade? So, let's say I entered the trade here, and people would ask me, what was your reasoning for your trade? What is your confluence that you saw to make you want to enter this trade? And I could say, well, I was in an uptrend, I saw a breaker structure. That's what a confluence is. It's the reason you wanted to enter into a trade. So, our first confluence that we're going to look into is a break of structure. A break of structure is quite simple. It's just going from one trend and changing to the other. So imagine we're in an uptrend. A break of structure is signaling that we're going into a downtrend. So, to actually show you what this looks like. Right, so here, imagine we have a downtrend here. We're getting this high, this low, lower high, lower low, and then lower high, lower low. But then we get a blue candle that closes above the previous candle's high. If we had something like this and then it wicked above it, that's not a breaker structure. So all a breaker structure is, I've got the definition here, when the current trend is disrespected via a candle closure above or below the most recent low or high. So in terms of changing from a downtrend to an uptrend, it would be a candle closure above the most recent high. Now, if we were looking at an uptrend, it's just the reverse of this. So imagine we're moving up. So there you go. Imagine we're in an uptrend, so higher highs and higher lows. And then we see a big black candle. We see a big, girthy black candle on our screens. And it closes below the most recent low. This is a break of structure to the downside. So we're now looking to continue a downtrend. Let's have a look on a market example of a break of structure. I showed you one about 5 minutes ago. Right here, we were in a downtrend. Where did we break structure? Where we closed above the most recent high. So this candle here. If we zoom in a bit. We were in a downtrend. And then right here, on this candle, we closed above the most recent high. This is the most recent high. We had a candle closure above it. We are now in an uptrend. But if you noticed, the uptrend didn't. It started going down again. So we've seen it start an uptrend. We've seen a higher high, but then we see a lower low. How does that work? Well, that's the problem with trends. They're not guaranteed. Oh yeah, if we break structure to the downside, we're not just going to immediately assume, yeah, we're definitely going to be going down for the next 10 minutes. There's no way to guarantee that. All it shows is momentum in the market. So if we see a break of structure to one side, chances are we want to take the trade on that side. But we're not fully sure until we use some of our other confluences in conjunction with it. So that's one of our confluences that we're going to use to enter trades. There's about 10 more things that you want to know before you fully commit to a trade and you're like, yes, this is what I want to know. Don't be going on your trading view and being like, yep, I know break of structure, bang, enter off every single break of structure. It's not going to work. You're going to lose a lot of money. So this is exactly why you need to learn some more confluences. We're going to learn another one, liquidity. This is the king of all confluences, in my opinion. So I'm going to draw another uptrend. Now, something to understand is the way the markets work is the big firms, in order to get their buy orders filled, let's say they want to buy. So they want price to go up, obviously. When you buy more, price goes up. So more people are buying, the more price goes up. So what do they want people to do? They want to be able to buy. What does that mean? Someone has to sell it to them. In order for them to get these sell orders, what do? They go to where people are selling. So if you think about it, when you see this low here, some people are selling on this low. So they see this low right here as we're starting a downtrend. We need to sell here. So as you can imagine, we have sell orders below these lows. And below these lows, we have loads of sell orders. But let's say, on the other hand, above the highs, if they want to sell, they've got their stop loss, which we went over in the last video, their stop loss above the high. Because they think, okay, if it continues going up, my trade idea is wrong. So I might as well not be in the trade because it's going to continue going up. So I'm going to put my stop loss above the high. What does that mean? That means there's buy orders above the highs. As you can see. So we've got these buy orders above the highs and sell orders below the lows. So if the market makers, the people, the big firms with all these buy orders they want to fill, they want to take a bunch of these sell orders down here, so then they have enough volume and enough orders sold to them so they can drive the price up and they have filled their order and they can buy. Because in order to buy, you need to have someone to sell it to you. So to get these sellers, they go below these lows. Or if they want to sell, they'll go above the highs because that's where people are buying. So what are they likely to do in order to fill their orders? Drive price down. Drive price down. Drive price down. Look at this. We've just collected all of these sell orders. We've just collected them all. They've all been sold now. They've got their orders filled. They now have the fuel, the opportunity to reverse. Now, that does not mean it's guaranteed. Once again, you don't want to be taking trades fully just, yep, I saw liquidity sweep. I saw this liquidity get taken out. Take a trade. No, because you don't know until it's going to reverse. Which is why we use breaker structure as well. We use fair value gaps as well, which we're going to get into in the next episode. First thing you want to know is confluences on their own are not powerful enough to be taking trades. You need to use them together to form an idea. But liquidity is a very powerful one. So if we see a liquidity sweep like this, we've took out this low, it gives market the potential to reverse. That's all you need to know. If we look at a market example of a liquidity sweep, let me just find one. Here we go. Perfect example on the 1 hour time frame. So it looks quite confusing, but we were in a downtrend. We saw a breaker structure on this candle, which we just learned. What did we see then? This low got taken out by this low. If I mark it out. See? This low took it out. It wicked below it. What immediately happened? Boom. Massive reversal. So all it is below lows and above highs, there's buyers and sellers. Depending on where the market wants to be pushed, they will buy or sell towards these places to hit these orders and fill their own orders. Now let me show a bearish example, like in a downtrend, like this. What have we got? Similar to before, above the highs. What do we think we have? Buy orders. People are buying on this move. They think, okay, move up, let's buy. It's going to continue. It's a breaker structure. They're not, then they don't know what they're talking about. Below the lows. Sell orders. Above the highs. Buy orders. So when we dip below this low, we've swept liquidity. We can now have opportunity, and that is the key word, opportunity, to reverse. So that was a quick episode. We went over trends, confluences, breaker structure, and liquidity. I know it was quite quick. If you need to go back, take notes. Actually, make sure you understand the basics before you go on to the next episodes watching, the more complicated stuff. This is what you need to get down. What a trend is, higher highs, higher lows, lower highs, lower lows. What a confluence is, what does it mean, what do you use it for? Break of structure, you need to mark out 5 examples of breaker structure, 1 to the upside, 1 to the downside. Do your homework, trust me, doing your homework, it will help you. And then liquidity, this is probably the hardest one to understand, but it's the most valuable. If you can understand liquidity, you can understand where the market wants to go. For example, where should you be looking to buy or sell here? Well, immediately I can see this. We've swept this liquidity right here. We saw a breaker structure to the upside if it closes above this candle's wick. So immediately I'm looking for buys. Just off that. And where am I going to set my take profit? Where am I going to want to target? Previous draws in liquidity. So if we know the market makers want to hit these liquidity draws up here, why not set that as our target? you know, because we know this is where they want to go next, so they can fill their orders and then they can start going down again towards this bit of liquidity. It's how the market moves. But yeah, that's our 4 steps for today. Make sure you master it, do your homework, mark out liquidity sweeps, mark out breaker structure, understand trends, and check in for the next episode.